Hey guys, what's going on? Troy at Mountain Man Treasure here, and as promised, we've got the tax man. Mark II is not your dad's CPA. Thanks for coming in tonight, man. I sure appreciate it.
Yeah, absolutely. Happy to come on here and chat a little bit.
Yeah, we'll get people kind of filtering in slowly here in the first few minutes, but just as way of introduction, you are a CPA, but you're also a reseller. Can you tell us about the reselling portion? Like, how did that get started? I know you primarily do Amazon, right?
Yep. Yeah, so I do Amazon FBA, so fulfilled by Amazon, and primarily like private label. So I have a couple products that I source from China and sell under my own personal brand through Amazon.
Okay.
So, a lot of my clients do, retail arbitrage or whatever, where you just go and you hit up the thrift stores and you just are buying sourcing stuff all the time and selling it. But that doesn't appeal to me personally as much. And I don't have as much time for that just with all the CPA stuff I'm doing. So anyway, that model that I follow works out really well for me. And I got into it like 4-ish years ago, right around the time, I think when I started picking up clients who were doing the same thing or selling online. It's just like around that time I started hearing about, like my friend's brother-in-law was making, $6,000 every month in profit selling like swimming caps. And you just start hearing all this stuff. I was like, man, I gotta start doing this. So just started getting into it and sort of specializing in that on my CPA side as well.
Okay. Yeah. Thrifty Picker says, I just signed up for Not Your Dad's CPA.
Yes. Can't wait.
So, Thrifty, are you talking like a subscriber, or did you sign up for a CPA services? What did you sign up with? Now I'm curious. Or you have a course as well, right?
Yeah, it could be either my course or he might be talking about just like my tax list for tax prep this upcoming season.
You said it was from when you were on Harry Tornado's channel. And now we've got Michelle saying she signed up when you were on Rally Routes here recently.
Yeah.
Yeah. He says, I need help. Tax season scares me. And I think that's the class. Michelle signed up for your class, and maybe he did too. I mean, and that's the reason I wanted to have you on, because I mean, we sell for like 10 months out of the year and we're fine, right? And then we get to right about this time, maybe the end of November, and then the tax man's coming and we start to get nervous because maybe we didn't set this thing up right? Like, because when I started in January of a couple of years ago, and I thought this was going to be just I'll sell a thing here and there. Like, I had no idea it would take off. And then, so about 6 months in, it really is when I started to realize I'm going to need to figure out this tax stuff. It can be a little intimidating because it's new. People are running their own business. They've not had to deal with that before.
Yeah. And I think that's a key point, how you said it. You're like, you get a little bit nervous because you realize you haven't set this thing up right. And that's exactly what I try and teach people to do, because, a lot of people think that you can get to the end of the year or bring your tax person all your stuff and that they can just like work all this magic and reduce your tax bill to nothing. But really all the things that you need to do, or you have to do a lot of things during the year to set that up, to like enable that to even be a possibility for you. And that's really what I try and emphasize for people.
Yeah, there's a lot of preparation work that's, I want to say needed, but I guess it's also, if it hasn't been done, it's not, you're not going to jail. It's not the end of the world.
Yeah. Yeah. Right. You just want to be in the best position financially as possible. And, a lot of times it's not possible when you get to the end of the year.
Yeah.
I mean, I'll get somebody's, maybe a new client's stuff at the end of the year, and I'll be like, man, if only they had been an S Corp since January, they could have saved $10,000, but there's nothing we can do now, better luck next year type of thing.
Right. So when did Not Your Dad's CPA, when was that born? You got into the reselling thing. When did you realize there was sort of that niche between the two?
Yeah, I mean, I've worked in public accounting and corporate finance, and I started doing taxes on the side. I just decided I should try doing stuff on the side a little bit, so sort of phased into it a little bit more and more each year. So I think I did 2 or 3 tax seasons before starting to niche down a little bit in the reselling space.
Okay. And do you, a lot of folks say, hey, if you're a reseller, you're worried about taxes, go see a CPA. Do you need to see a CPA that I don't know necessarily has to have experience in reselling, but that understands it? I mean, is there anything different, or can you just pick a CPA?
Yeah, I mean, yes and no. Like you should be able to just pick a CPA, because honestly, there's nothing super complicated about reselling and taxes, or there shouldn't be for a CPA. But still, I get a lot of people coming to me saying, my CPA has no idea about Amazon. He has no idea, or she has no idea about eBay. I think for a lot of CPAs, when they get that stuff, they think it's more complicated than it really is, or they're just not familiar with the reports that you should be running, or like where to get your information, so they might not be as helpful. But really, like any inventory based business, I mean, for taxes, it's treated the same, but not all CPAs feel comfortable with it.
Yeah, it's interesting that we get intimidated by the tax stuff, and there's CPAs that apparently get intimidated by the online selling stuff. We're each scared of each other.
Exactly.
And so you have this interesting mix of experience and expertise kind of fit together really, really well. And I think a big problem is there's a lot of misinformation out there, isn't there? I mean, if people are looking for their tax information on Facebook or message boards, there's a ton of it that's just not right.
Yeah. I mean, I get a lot of positive feedback about, like my online tax course, for example. But I saw a comment out there one time, and somebody was like, you guys can get all this stuff out there for free, right? And it's true. But I heard on a podcast or something the other day, like, we live in the information age, but we also live in the misinformation age. Like, there's so much misinformation out there, like you said, that it's like, if you feel like you're a beginner and have no idea about taxes, like, good luck trying to distinguish what's true versus what's not,
Yeah. Well, and you had a recent video talking about 5 myths of reselling. One of them I know is that people think you can avoid paying taxes if you hit under a certain amount. I don't have to worry about it. They'll never know. And that's just not the way you should do it.
Right. It's just, in that case, the company or Amazon or whoever isn't reporting it to the IRS, but that doesn't mean that you don't still owe taxes on it.
Right. So that idea is, what are the numbers? It's 20. Is it 20,000? That's the magic number.
Yeah. So if you have sales of 20,000 or more and 200 transactions or more than 200 transactions, then you will get a 1099-K from your payment processor, and so will the IRS. So they'll know about it. But that doesn't mean, if you sell less than that, that doesn't mean that you don't have to report that income. It's not like tax-free.
Yeah. And it's one of those things where I guess you could get away with it, but there's also a shot that at some point you could get caught, right?
Yeah. I mean, there's a chance, and some states actually have lower thresholds than that. So
okay.
It all depends.
Okay. So what are some of the other, the big misinformation? What are some of the others that trip people up?
I mean, one I talked about on that same video, and that I'm actually posting a video about soon, is the home office deduction. So there's the idea out there that if you take the home office deduction, you're going to be flagged for an audit, that it's an audit trigger. But it's so that prevents people from, that makes them too scared to claim it on their taxes,
right?
And potentially save hundreds or thousands of dollars because they're worried about being audited. But first of all, the home office deduction is not an audit trigger. That's just kind of an idea that has sort of persisted for the last I don't know, a few decades. But if it ever were true, which I don't think it was, it's definitely not now, just because it's so common and there's been a lot of like simplification in the tax code or like legislation that makes it easier for us to take. So I always encourage people to take the home office deduction, because so many of us, work out of our homes, or at least store inventory in our homes, and that's all stuff that usually qualifies for some type of home office deduction.
Yeah, my garage is now the eBay warehouse. I mean,
Totally.
there's very little done in here that's not. So I could safely say 95% of it. My dog eats in the corner. 95% of this is eBay office, and that's a deduction, right?
Yeah. If you use that 95% regularly and exclusively for your business, then definitely.
Yeah. So, I'm doing YouTube here in this section. My inventory is over here. I'm shipping over here. My boxes are there. That's valid.
Yep. Absolutely.
Yeah. And that's a pretty big deduction.
Yeah. I mean, it can be huge depending on that. I mean, there are two different methods that you can use. But yeah, depending on how much space you're using and how much, like how many shared expenses you have, like mortgage interest or rent or property taxes, utilities, that all gets factored in.
Yeah, because you can also deduct things like I use my phone, ballpark 50% of the time. I list everything on my phone. I'm comping on my phone. I'm recording videos on my phone. So a portion of my phone bill is a deduction, right?
Yeah. And if we're talking cell phone, that one's actually like outside of the home office deduction, like whether or not you have a space in your home where you work all the time. If you're using your phone 50% for business, then you can deduct 50% of the bill.
Yeah.
Or even the phone itself.
Right. We've got a couple of questions coming in that I think are good. Michelle wants to know if there's a cap on mileage, and that's another deduction that I think people don't take that they absolutely should. And I know there's a couple ways to do that, right?
Yeah, I don't believe that there is a cap on mileage.
Okay. So it's whatever the federal reimbursement rate per mile was, it 50 some cents, right?
Yeah, I always get confused because it changes every year, but I think it's 57.5 cents for 2020.
Okay.
Yeah, and I mean, some of you guys are like driving across, a couple states just to like go sourcing. So I see people rack up like 30,000 plus miles sometimes. That's $15,000 deduction, basically.
Yeah. Yeah, I know the mileage deduction is definitely a big one. And I guess you talked about how the home office is not a trigger. I would assume that that's the case this year more than any other, right? I mean, just home office is going to be assumed for so many people.
Yeah, I mean, there's no way they're going to be able to isolate anybody based on it because so many people are going to take it.
Yeah. Wendy wants to know, how will the home office tax laws change this year now that so many people are working from home? I mean, are the laws changing, or is it now just sort of accelerating that acceptance of there are a lot of home offices out there?
Yeah, that's a good question. I mean, it might change. It'll be interesting to watch. Like before 2018, if you worked at home, like if you had a W-2 job and you worked at home for the convenience of your employer, then you could also take the home office deduction, even though you weren't self-employed. But they did away with that in 2018. So now you can only take it if you're self-employed or have like a side business.
Right.
But with all the COVID stuff, I wouldn't be surprised if they reenacted that portion for people who are employed.
Okay. Mark, you talked about, well, I mean, right now we're talking about deductions, I guess. So one thing that I know confuses people is just how do you track your inventory? I see questions all the time. How do I track my inventory? What spreadsheets do you use? That's not necessarily needed if you're doing it just in terms of figuring out cost for tax purposes, right?
Yeah. So this is one that's just, it's always been a little bit confusing. So up until 2018, for the most part, you could only deduct your inventory when it's sold. So that's called the accrual method. for inventory.
Mhm.
Like, even though I spend $10,000 on inventory now, I can't deduct it right now. So, but when I sell half of it next month, then I can deduct that half next month.
Okay.
But then another change in 2018 was that they made the cash method for inventory more widely available, meaning that that you could do that. Like, if I go buy $10,000 worth of inventory today, I can deduct all of it today. So you just have to choose one of those methods, and the IRS wants you to be consistent.
So once you pick one, stick with it, essentially.
Yeah, I mean, you can change, but you're technically you're supposed to fill out a form, and I think yeah, and you can't flip flop. You might have to stick with it for 5 years, but I might be confusing another rule on that one.
So in terms of benefits of each, I went with the cash method because that's when I kind of started, and I was like, hey, that's great. I started tracking, and I do this part-time, and it was just so much extra work for me. And then I realized I can do this cash method. I don't have to track each individual when I mean, it saved me so much time. Is that the biggest plus of the cash method, is just you're getting rid of a lot of paperwork?
Yeah, it's definitely it's definitely simpler for sure. Yeah.
Okay.
Yeah. So if I tell a lot of people, like, especially if it's like more of a hobby, or they don't expect to ever like grow a ton, or if they don't want to, then definitely cash method. Or if they just prefer the simplicity and they're pretty big, then cash method is fine. I also like the accrual method for some instances, just because it does a better, when you're looking at your profit and loss for each month, it does a better job at matching up your costs to the revenues or the sales that they belong to.
Right.
You know, if I buy $10,000 of inventory this month, maybe it's on my books, it's going to look like I have a huge loss, but really I'm not losing money. I'm just buying inventory that I'm going to sell later. But then when you look at your books, like from a year-to-year basis, it could just all average out. So, you know, it might not be that big a deal anyway.
So for those like you that are accountant minded, they want to see the numbers. You know, that's a good thing. Me, where numbers are like, you know what, doesn't matter to me. I know I'm making more than what I'm spending. Cash is good enough for me.
Yeah.
I know you want everybody to be accrual, don't you? Your team.
Well, not necessarily. I do want people to track their numbers, because a lot of times people don't realize how profitable they are or how much money they're losing.
Yeah.
So that can be a wake up call. But if you do know that if you do know your numbers to an extent, and cash is going fine for you, then I think that's great.
Okay. One of the things that people are so scared about, and rightfully so, I guess, but it's almost turned into the boogeyman, is the audit. Talk about that a little bit, because you were saying right before the show started that being audited is really, really rare. It doesn't happen very often.
Yeah, and I mean, I've been doing, you know, several hundred tax returns each season for the past few years, and only, I think just this year, somebody emailed me for the first time saying that they got selected for an audit. So it's pretty rare. I mean, it's less than 1% of the time generally. But even if you do get audited, it's not anything to fear. I mean, you're not going to jail. Like, that's the biggest myth. And you know, nobody's coming to your house. I think we always think of like two IRS agents like showing up at our house, just like tearing apart everything, you know, but almost always now it's just audits by mail. And it's not like they're not going through your whole company. They're just going to choose one or two areas from your tax return. Like, they might send you a letter that says, hey, you've been selected for an audit. Can you give us support for this mileage number and, I don't know, like your materials or something. So, I mean, it does make it more challenging if you don't have any records. And even if you didn't, you know, worst case scenario, they're going to disallow those deductions and basically charge you the difference in tax. But I tell people, like if you don't have a mileage log, for instance, then go back and try and recreate it to the best of your ability, and just send them that substantiation, and it should just all go away.
Yeah, I always think, when I think audit, of the old Seinfeld episode where he's trying to track down, like, he's on the phone with the electronics store. Like, I bought a computer there in 1984. Can I get a receipt for that? I'm being audited. That's not what happens.
Okay, I have not seen that one, but I try and collect tax video clips, so I'm gonna go find that.
Yeah, the old Seinfeld, the whole episode, he's running around trying to find old receipts, and they're giving him a hard time, saying, this is a mess. You need to keep better records. Yeah, you'd enjoy that one, Mark. I'll have to find.
I would.
I'll send it for you.
For sure.
And you talked about having that documentation, and Thrifty Pickers brings that up. I mean, since we normally don't get receipts at yard sales, what do you recommend for legally tracking inventory? Like, what is, because so much of our business is a cash business. I know some people say get a receipt at garage sales. That feels weird to me, to ask somebody for a receipt when I bought a 50-cent item at their garage sale. What do we need to do?
Yeah, I mean, well, first of all, the IRS, I never want to say never, but they're not gonna look at that level of detail. Like, they're not gonna drill down that far where they're asking you for a receipt for 99 cents or whatever. So I mean, yeah, if you're buying something for $1,500, then I don't think anybody's going to get bent out of shape if you say, hey, could you sign this, or could you write me out a receipt for this? But even if they don't, like, I think it's just good to, like, maybe have a logbook of some kind where you just list the items or the date, the price, the location, just a few of those, like, key pieces of information, and that will be sufficient for whatever comes up.
Okay. So if people want to get one of those, like from Staples, a little receipt book or something, and you're writing your own receipts, essentially, that's fine.
Yeah. In the case of garage sales, sure.
Yeah. And same deal with mileage. If we're just tracking it, like in a, on a little calendar or in some sort of notebook or something, or do we have to have, like, that electronic, there are apps that track mileage, that sort of thing? You have to go to that level, or what do you need?
I mean, I think apps are definitely much simpler, because it's basically all done for you in the background with minimal input from you. Mm-hmm. But yeah, some people prefer just doing it on a logbook. Like, my dad had a notepad where he would write the mileage, the location, all those. It's more, yeah, it's just a little more tedious, I think. But
yeah, in terms of those receipts, then. Do you have to have, I know you've talked about on your channel, you don't have to have the actual receipt itself. Like, we don't have to have boxes of receipts somewhere. We can have electronic versions of them.
Yeah. Yep. I mean, it says that right on the IRS website. So you can just get rid of the originals, which fade anyway. You can't read them after however many months, and just scan them, take a picture, put them in some kind of folder on your computer or on the cloud. Forget about them.
It's interesting. Wendy says we got audited after adopting our son, and we lost my in-laws. It was a simple process. It took about 7 to 14 days to complete. So that doesn't sound too terrible. Yeah,
there you go. Simple process. Only a couple of weeks.
She also asked, and I know we touched on this a little bit, but for new resellers, is there a minimum they must sell before they need to pay taxes? Like, if a reseller sells only $500, would they still pay? Like, is there a threshold, or is it that first item you sell for a profit that you're supposed to pay taxes?
Yeah, probably that. I mean, that's sort of an it depends question, but yeah, I mean, overall, really on that first dollar of profit, that's most of the time going to be taxable and reportable by you.
Okay. Because that's what I wonder, how it falls into, like, when people have garage sales. I would bet that there is not a person out there that reports their garage sale income on their taxes. I can't imagine. Maybe there's one or two.
Yeah, in that's one I don't think the IRS really pursues, because most of that stuff you're selling it for less than you got it for, so you're actually going to be generating a loss. And the IRS doesn't care as much if you don't report your losses. Although if you did, it would only benefit you because it would offset other income that you have on your tax return.
Right. So you could, if you're selling, I know a lot of resellers start by selling stuff just around the house. They pull out the old coat that they don't wear anymore and the pair of boots. And so you could figure out how much you pay. You paid $150 for those boots. You sold them on eBay to start out for $50. Officially, that's $100 loss that you took, right? And that's a deduction.
Yeah. I mean, and a lot of times people start on the side, like maybe they have a day job. So that's $100 that you could use to offset your W-2 income and pay less tax.
Okay. So anything that we sell of ours is essentially going to be a loss that we already owned. So new resellers have a little bit more probably deductions than we do.
Yeah, probably.
I mean, if you track it, I guess that's a little bit hard to track, right? Or to have the record of.
Yeah, I mean, you probably won't have a record, but in that case, just use your best guess, best estimate, and yeah. If you ever get called on it, I mean, I don't know. It's worth the risk.
But that's also the case for, like, if you get returns, that's you're not getting charged. I sell something for $50 and they send it back. You need to make sure that you keep that as a loss, right? Does that become a loss at that point if you don't sell it again, or how does that work?
Yeah, I mean, if they send it back, it's sort of like the sale never happened. Like, unless you're going to dispose of it, then it is a loss.
Or if you end up in the hole because of shipping or something.
Yeah.
Okay. Yeah. Tina says, many years ago, I sold giftware and greeting cards. I kept a journal for odometer mileage. Nowadays, there's an app for that. Yeah. Michelle, anything special that needs to be recorded separately for consignment items? That's a good question. I've never thought of that one.
Yeah, I always have to think about, like, if you are selling something for somebody else. That's what I'm assuming.
Yeah.
Yeah, because in that case, it's technically not your inventory. So you're not going to have cost of goods sold on that one. Yeah. I mean, yeah, that might be just slightly more complicated accounting wise, but nothing too difficult. But yeah, I don't know that I could come up with that on the fly.
You stumped the CPA, Michelle.
You didn't stump me. Sometimes I have to be like alone to think of something before I can articulate it.
Thrifty Picker says, yeah, Mile IQ. That is one that I know people use for tracking mileage. Chris, Cajun Reseller says, is there a depreciation on that pair of shoes? Yeah, how would that work? You buy something 10 years ago. Does IRS take into account depreciation of value?
Yeah, so they say so your cost, it should be like the lower of the original cost or the market value.
Okay.
So yeah, there's sort of two problems there. It's like the original cost, well, maybe I don't even know what it is, but maybe I do know what it is, but yeah, this question, like, was there depreciation? So then it's like, well, what's the market value? And that's hard to determine too, because maybe you can get it for $20 at Goodwill, but maybe you could sell them for $200 on eBay.
Yeah.
So then I've heard people say, well, just kind of take the midpoint and call that your market value. And if that's lower than your original cost, then you got to go with that.
Yeah. I saw, I lost the chat moved away from me there, but I saw, there it is. Email 75229, and we talked about this. Can one deduct space in the house for storage? Yeah, that would still count as like a home office deduction, right?
Yeah, and that's actually
I assume that if you don't necessarily have an office, but your inventory, you've got 50 things sitting in the closet is your eBay space. You could deduct the closet, right?
Yeah, and that's the cool thing about being a reseller, is that even if you don't qualify for the home office deduction, because you have to use a space regularly and exclusively, like storage space is the exception to that. So even if you don't meet those exclusive requirements, if you have storage, you can still deduct that square footage through the home office deduction.
Okay. So you just have to you got to get out the tape measure and figure out what you're actually dealing with and what percentage of the house it is or whatever, right? Like you just got to do the math.
Yeah. So stack wide and not tall.
Right. There you go.
If you got the space.
Yeah. She was asking about, for consignment. Here's more consignment question, I guess. On consignment, you would have to check paid back to the owner, which would be on their cost or an expense. Yeah, it gets a little sketchy, right? Or a little confusing because you're giving them some. Who has the tax liability? I mean, ultimately, I guess it would be whoever sells it, right?
Yeah. So, I mean, they give you inventory. Let's say you sell it for $100. Yeah, basically, if let's say you take a 20% commission, then you just deduct because you're giving them back 80%. So you basically are deducting that 80%, and you're left with the 20% of income.
So that's your taxable income. Then is that 20%?
Yep.
Yeah. James says, for consignment, when I have done it, I keep track of the amount sold for the item as income. Then I expense the fees, shipping, etc. Then I split the profit with the person. That's what I've done. We sell a few things off and on for my folks, and we take out all of that, all the fees, all the stuff, and then figure out, here's the tax that's going to come out of this, and then we split the profit. I mean, is that the easiest, cleanest way to do it?
Yeah. I mean, yeah, there's probably multiple ways, but if that works, then I think that's a good way to go.
Okay. Let's see. Yeah, James says the seller who sold it has liability for the sale, but also expense for the amount given back to the person.
Yep.
Consignment's just complicated, man, in many ways, for reselling. You talked about, you mentioned before, just sort of in part of another answer, the formation of like an S corp or whatever. Can you explain, like, is there a benefit to somebody forming like an LLC or something like that? Like, do people need to be worried about that?
No, generally not. I mean, the main reason to form an LLC is for liability protection. Like, it doesn't typically give you any special tax benefits or like tax savings. But the main things that it gives you is, well, liability protection. It can help you it can facilitate your dealings with like wholesalers or vendors or banks. Like sometimes they won't even work with you unless you're an LLC, and it can make you look just more legitimate. But most businesses are sole proprietorships. Like that's just what you are by default, and that's what most millions. It's like over 20-something million businesses in the United States are just sole proprietorships, and that's fine. So yeah, but yeah, at some point as you grow, you might want to do an LLC just because you have a wider reach, more exposure. You have personal assets that you want to protect. So yeah, and then go ahead.
That would be an S corp, right? Like that would be that's sort of next level stuff.
Yeah, so that's the typical progression is like you start out as a sole proprietor, and the next thing would typically be an LLC, and then usually when you're generating like over $30,000 or $40,000 of profit per year, that's the point at which you can layer an S corp onto that LLC, because in that case you can avoid having to pay a big chunk of self-employment tax,
okay,
which you are subject to as a sole proprietor and as an LLC. So that's basically 15% tax on your profit. So what's the cost of that? Like, what's the process to do that? Because it seems like even for somebody smaller, I want to say 15%, right? Like, yeah. So yeah, with an S corp, you don't pay self-employment tax on your profit, but there are also additional costs that come with operating as an S corp. Like you have to put yourself on payroll. So typically you have to pay like, $600+ a year on a payroll service. You have to pay for a separate tax return, whether you do it yourself or have somebody else do it. So that could be, anywhere from a few $100 to $700 or $800.
okay.
So you just want to make sure that the savings exceed those costs, and that break-even point is usually around the $30,000 or $40,000 profit level.
But you are going to add some more layers to what you have to do rather than just listing your stuff on eBay. There's going to be more stuff you've got to deal with at that point.
A little bit, yeah. I mean, there is more like paperwork and stuff, but it's not too bad, and you should be a little more serious about your record keeping. But yeah, I mean, once you get up in the 30, 40, 50, 60, 100,000, I mean, you can save up to $15,000 just from forming an S corp.
Yeah, that's big. I know. Go ahead, Mark.
You don't want to do it too soon. Like I see too many people who come to me who's like, oh, my friend or even my CPA told me I should set it up this way. And I'm like, they shouldn't have told you that. Like, you hadn't even started selling anything in it. Like, it doesn't make sense.
Right. Here's we got a couple things in here, but I want to point out the junior capitalist. This guy needs his own accountant. He is raking in money. Mark, this guy's 15 years old, and he's out hustling and outselling a lot of people on eBay right now. He's going to be running eBay here in about 10 years. If you guys are not subscribed to Junior Capitalist, go check it out. Thanks for coming in, man. I love watching what you're doing, hustling. He's been on the show for an interview before. Really incredible success. And he's been doing this for like, I don't know, 8 months. Like, he is so far ahead of the curve. It's unbelievable. I recently set up I guess it's a DBA, doing business as, because we don't have, like, here in Montana, we're not required to have any license, like a reseller's license or anything like that. But I wanted to look into getting, look at, he's correcting me. Yeah, he's 13. Sorry, man. I gave you.
Dude.
No, you got to go check him out, Mark. He's really, really good. I set up a DBA because I wanted it. You mentioned, some companies, you have to have something in order to work with them. So I set up a doing business as in order to get some wholesale lots, because they said, you know what, that will work. We just need something to show that you're a business registered in some way with the state. So now my name is registered with the state for the next 5 years. I think it was $25. But there was, like, Tina did ask a question here. With getting also an EIN, we could get a seller's permit to not pay sales tax at stores. Is that right, Mark?
Yes.
Okay.
Yeah. So I mean, it depends. Like, probably not Walmart. Like, if you work with certain vendors or wholesalers who know that you are buying inventory for resale, and that sales tax will eventually be charged on those sales, like, they don't have to charge it to you because they know that you're going to charge it, or Amazon's going to charge it to the end user. So, but yeah, to get that exemption, you have to give them a reseller certificate, which is something that's either the same as or that you get in addition to a seller's permit. It's basically just registering for sales tax with your state.
Right. Yeah, I'm one of the lucky ones. I don't have to worry about state sales tax. But that does, I mean, what does the changes with eBay and sales tax, does that add anything for us now that eBay is collecting sales tax for pretty much?
Wait, so are you in Oregon or what? Montana?
I'm in Montana.
Yeah, I mean, that in almost every state now, they have marketplace facilitator laws, which means that any marketplace facilitator, which is basically the big selling platforms, eBay, Amazon, Poshmark, Mercari, Etsy, like, they're required to collect sales tax for us in almost every case. So nothing we need to do.
Does that change what we do at the end of the year with taxes at all? Or is that just going to be reflected on the paperwork we get from PayPal?
So that's a good question. So that's sales tax. At the end of the year, that's mostly income tax related.
Okay.
But, so let's say you live in Washington, where they have sales tax, but also they have marketplace facilitator laws so that the platforms take care of it for you. But you don't want to have to pay sales tax on your inventory purchases from your vendors. So in that case, you have to register for sales tax, get a seller's permit, get a reseller certificate, and then you don't have to pay sales tax on your inventory purchases. But now you're on the state's radar, you're registered for sales tax, and they're going to expect you to file a sales tax return.
Okay.
Maybe quarterly, maybe annually. So in that case, on your return, you're going to list your Washington sales, but you're also going to list those Washington sales in a field below as an exemption or a deduction.
Yeah.
So that because the platforms are collecting it. So ultimately the form is going to show zero tax due. So it's just a hoop you have to jump through for being registered.
So you mentioned like quarterly there, and that just brought to my mind the paying taxes ahead of time. You can prepay taxes. How does that work, and when do you have to do that? When is that advantageous?
Yeah, well, so that I was talking about sales tax,
right?
But,
yeah. It just triggered. Yeah.
No, this does apply to income tax too. So, estimated taxes, like estimated income tax.
Right. Yeah.
It applies both to federal and state, but typically, so the main rule is if you're not going to owe over $1,000 at the end of the year, then you don't have to worry about estimated taxes. And estimated taxes are basically just paying your tax throughout the year rather than all at the end. If you're a W-2 employee, you have tax withheld from your paycheck every pay period, and your employer is remitting that tax regularly. But then when you're self-employed, depending on how much you're making and how much tax you owe, the IRS wants you to send that in throughout the year quarterly. So, but yeah, if you're not going to owe over $1,000 in tax, you don't have to worry about it. The other rule is if you already paid 100% of the prior year tax liability, then you don't owe anything. Or if you've already paid 90% of the current tax year liability, then you don't have to pay anything. So those are the rules. I have a video on that too, but like you can use a tax calculator to figure out how much you're going to owe, and then you can figure out if it meets those rules or not. And if it doesn't, then you basically just divide it by 4 and make a couple online payments throughout the year.
There's potentially a fee for that, right? If you didn't pay quarterly.
Right. So that's the thing. Like a lot of people, they don't know about it. And, they just wait till they do their taxes at the end of the year. And then they find out that they get late penalties with interest. So yeah, because if you're not paying your estimated taxes when technically you were required to, then you get late fees.
Yeah. James is throwing out all the letters here. With the S corp, you have to pay yourself a salaries. That's right? You have to draw a salary of some sort.
Yeah, that's one of the main requirements of having an S corp. You got to put yourself on payroll salary.
So it's not the same as I've got money in PayPal. I need money this month. I'm going to take it out.
Yeah, that's technically just like a distribution. But yeah, when you're an S corp, you actually have to put yourself on payroll where you have like FICA withholdings, Social Security, Medicare, and all that stuff.
Okay. Yeah, Chris says don't try and use a resale certificate at Target. They don't. Yeah, Target doesn't like resellers very much. Let's see if we have anything else in here. Yeah, I've heard them ban resellers before. Yeah, James, they will go. Orlando on Pure Hustle podcast has had issues because that guy doesn't go in and buy like 5 things. That guy buys 5 carts of things, and they're not a big fan of his at Target, and so they don't. They actually have internal memos to not sell to resellers, which is crazy. Mark, what are some of we've talked about deductions, but what are some that people should be taking, but we're not just because we don't know that they're there?
Yeah, we already said home office. I mean, you mentioned one like cell phone and internet. Those are deductions a lot of people don't think of. But a lot of people are spending a lot of time listing stuff on eBay or whatever, and they use your internet, half or more for the business. So you can deduct in that case, half of your bill. Mileage is one that people might not be thinking about or might not be tracking. Sometimes people tell me like, well, I didn't track it, so I don't want to take it. And I'm just like, well, I still think you should take it. If it's a legitimate, if it's something that if it's an expense that you actually incurred in your business, even if you don't have receipts or substantiation, like you should still deduct it. Like there's a risk that maybe you get audited and maybe the IRS says you can't take that because you can't prove it. But that it's real. Why miss out on that deduction?
Right. So if you didn't necessarily track it, you can take your best guess and maybe undercut it a little bit just so you feel safe.
You could, yeah. Worst case scenario, I do tell people to use their best estimate.
Okay.
But yeah, one deduction that's new and it's not specifically related to reselling, but it is related to being self-employed, is called the qualified business income deduction. So, and that's basically a deduction for that is worth 20% of your profit. So if you made $10,000 profit for the year, then on your income tax return, you get a deduction for $2,000.
And how does that work? Who qualifies for that? Anybody?
It's kind of complicated, but for resellers, it's pretty straightforward. Like it's pretty much going to be like if you're a typical reseller, then you qualify for it.
Okay.
It's just one you want to make sure that you see on your tax return.
Right. And what was that called again?
QBI, qualified business income deduction. Okay. So it's just one that not everybody knows about. So they don't like one person I know, like they learned about it because they heard me mention it. And they're like, I told the lady at H&R Block and it wasn't even there. And, I taught everybody in the building about it or something. So I don't know.
Yeah. James points out computer equipment also. Like if you buy a label printer or laptop to list, or that's all business expenses.
Yeah, totally. And almost anything that you purchase for your business is going to be at least partially deductible.
Right. Tina says equipment like such as computers and printers, are those assets just appreciated over a few years versus like supplies, packing materials that you buy and use?
Yeah, they could be, but there's also there's a rule called the de minimis safe harbor rule that says you don't have to worry about depreciating it if it's less than $2,500. Because typically like with equipment or vehicles or machinery, like you're supposed to depreciate it, which means you take the deduction over 5 years or so.
Right.
But with this safe harbor rule, the IRS says, well, if it's less than 2,500, you can just immediately deduct it and not have to worry about depreciation.
Okay, that's the cash and accrual, right? Like one is so much simpler. Just go ahead and do that.
Yeah.
Yeah. So yeah, if you buy a laptop or you buy a label printer, you buy a webcam, if you've got a YouTube channel, that works too. And what about like how does YouTube come into the mix? Is it going to work the same way? Like in terms of they'll send you the form at the end of the year? If you're monetized, I guess.
Yeah, that's a good question. No, I don't know that for sure. My guess is that YouTube does send you a 1099K if you monetize or have earnings through YouTube over 20,000.
Yeah,
that's a good question.
Which would be, that's a pretty high bar to reach on YouTube, to be honest. To hit 20,000, we don't have to worry about that here. That's not a concern. Yeah, James said if you use it for personal use and business, you have to figure out the percentage of use for business and deduct that. So same thing as with your cell phone or with your internet or anything like that. You have to figure out the percentage.
Right.
And I guess that's a little. You've got wiggle room there, but you want to be honest about it.
Yeah. Yeah. Exactly.
So, we've talked about all these deductions, Mark. We've talked about, the things that you need to do. What about the folks that just started this year? Maybe they started 3 months ago, 6 months ago, and they didn't anticipate getting to the point where, wow, I'm making real money, but I don't have real documentation. What do they do at this point?
Yeah, I mean, it's not the end of the world. Like, it's usually not terribly difficult to put together a reasonably accurate picture of your activity for the year. All the sales and platform fee information is usually going to be in your platform. Like, you can download a sales report from eBay or Amazon or whatever, and that'll give you your total sales. If a lot of the times you can go back in your bank or credit card records and separate out all the business transactions and get an idea of your inventory that you purchased and your supplies and all that stuff. You can estimate your mileage, worst case scenario. So just kind of going back with the records that you do have and putting together a picture of that, basically your profit and loss for your tax return. Yeah.
So rebuild your history a little bit,
right.
And you're probably going to miss some of the deductions that you would have had because you forgot that trip to buy boxes, or that weekend you actually drove 30 miles out of the way to go to a garage sale. You're going to miss a few things.
Yeah, you'll either miss and have to pay more tax, or you might overestimate and maybe get in trouble. Just kidding.
Yeah, that SSK promo says, yeah, that's my situation. Now, I was in that here a couple of years ago. And it actually, we talked about earlier in the show that, worst case scenario, you get audited, and it's not as bad as you made. It's like when I went to college and we had to take a communications law, and you couldn't take it till senior year, but it was only offered one semester of the year. So it was one of those things where, like, you have to get this class to pass. If you fail, they don't give it till next year, which means you're around for another semester. It terrified everybody. And then I got in it, and I was like, I got like a 98%. And I was like, it's not that bad. Sounds like kind of the same deal.
Yeah, exactly.
Yeah. So audit, I mean, we don't want to be audited, but if it happens, just call Mark, and Mark will get you out of it, because so Mark, I know we're running a little bit light on time. Well, Michelle here, there we go. If you join GoDaddy, can they pull your past sales, or does it start at the time of joining? I actually use GoDaddy, Michelle. I know this one. You have to manually go back and enter stuff from the past, but it automatically sucks in stuff that you're using. All the sales start populating. But we had to go through, as I recall, and manually input past stuff. GoDaddy is one that we use. Mark, are there others, or do you recommend GoDaddy? Is that one that's good to be using? We lost your audio, Mark. I don't know where it went. Yeah, your audio is gone.
How about now?
There we go.
Sorry. Yeah, I do recommend GoDaddy. It's similar to another one called QuickBooks Self-Employed. And again, they're simpler programs. They basically track your sales and your expenses. Like, they don't have asset and liability accounts, which is something that a more robust program like QuickBooks Online has, or Wave Accounting, which is similar, but it's free. So it kind of depends. Like, are you accounting inclined, or do you prefer like simplicity? Because like QuickBooks is the best, I think, but it can be really overwhelming to someone who's not in that world.
Yeah.
So
I really liked GoDaddy because it was so it kind of holds your hand. It asks you about the different, okay, now your mileage, input that. Okay, now that, like, it walks you through it. And me, a guy that, my wife is exceptional at numbers. I'm not great at them. So between us using GoDaddy and just filing our taxes online through TurboTax, it actually, it was really intimidating to start, and we got through it and went, that wasn't that bad.
Yeah.
We could handle it. But there are instances where, it's going to make more sense to go to somebody like you, to go to a CPA and say, can you handle this for me? But you don't want people going to you and saying, here's all my receipts, here's my mileage, can you do this? Like, we should be tracking a little bit of this, shouldn't we?
Yeah. Well, you asking me if you should be tracking?
Yeah, like at what point at what level does the CPA take over? Like, how much responsibility do we have to take in tracking at least a few things? Or can we just go and hand them a box of paper and say, make your magic happen?
Yeah, I mean, you can. I really encourage people to track their numbers throughout the year, because it gives you so much more visibility into what's really happening in your business, and that allows you to make decisions, to make improvements and stuff like that. Whereas if you're not tracking and seeing those profitability numbers, then a lot of times people are just assuming that they're profitable when maybe they're not. But yeah, like, not everybody needs a CPA. Like that just comes down to like your comfort level and the complexity of the business. Like, it's if you have $1 million, multi-platform reselling business, that's a lot different. That's a lot more complexity than if you just have a W-2 job. There's a lot less room for error, with a W-2 and nothing else.
Right. Mark, we're in our final few minutes here. I do want to at least point out, people mentioned it at the front end, your class, you've got a class. Can people still get in on that? Has it started, or how does that working?
Yeah. So I didn't close it this year. I mean, it's more, I'll do like a more of like a discounted launch in, or I guess a promotion, like mid-January. Okay. But yeah, it's called Reseller Tax Academy. And it kind of does what I've been talking about. It's not like, it doesn't teach you how to prepare your taxes. It teaches you the things you need to think about and do during the year, so that you can be better prepared, and so you can be like better optimized with your tax situation. And one thing I think it really does a good job of is just helping people overcome the anxiety and the stress that so many people feel with, the uncertainty. Yeah. Because once you can throw all that stuff out the window, it's not like, sapping all your energy, and you can like refocus that onto the stuff that's actually making you money in your business.
Right. Yep. Marcia says she has all her totals for everything on a monthly basis, and then all I have to do is add 12 numbers in each column up at the end of the year. Marcia, you've got to figure it out. We need you to run our businesses. Marcia's got this thing sorted. So what can people expect, I guess, Mark, if they go and we want to send people, Chris posted the link here a little bit earlier, but people go over and check out Mark he's on Instagram. He's also on YouTube. He's putting up videos on YouTube. What can people expect, I guess, on both of those platforms?
On Instagram, I try and post a couple times a week. Just kind of like behind the scenes stuff. When people email me questions or there's stuff in the news that's tax or accounting related, I'll post it and kind of give you my 2 cents. But then, I dove into YouTube just a few weeks, a couple months ago now. So that's kind of a new thing for me.
And I like it. And you're putting out videos, they're like 5-7 minutes long, super digestible, really bullet pointed kind of stuff. It's super good. So everybody needs to go over and check out Mark's YouTube channel. We need to get you making more videos, like you have more time, because they're really, really good. Yeah. And James said to check out your Facebook group as well. What's your Facebook group, Mark? Because I didn't make a banner for that.
It's called Accounting for Online Sellers. So come on there, post your questions. People, it's a lot more active. Well, like in the early days, I was answering all sorts of questions, but now I have a lot of, there are other CPAs, there are other experienced sellers in there who will hop on and help answer questions too.
Do you have a spreadsheet for like cost of goods and stuff? Do you have any forms or spreadsheets on the Facebook group or in your class or anything like that?
Yeah, the links are in my Facebook group. They're on my website. Can I post it here? I don't know if I can.
James just dropped your Facebook group link. Is that
okay? Yeah, it's up at the top of the posts in that group. Okay.
So follow that link, guys, that James just dropped. That goes to Mark's Facebook group. And then he's got links to forums and stuff on there. James, thanks for doing that, man. I appreciate it. Now we've got another young reseller just popped in. A young reseller, 15 years old. So, it's crazy seeing these kids get started. It's so exciting. I wish I was that squared away when I was.
Yeah, makes you think, what the heck was I doing when I was 15?
I know. I had to, I started this to pay off like school loans and stuff. Like if I was this squared away, I wouldn't have any school loans. I'd be saving up for my next mansion. Yeah. So guys, go check out Reselling Buddies. We got another young entrepreneur in here, which is awesome. Beth, thanks for stopping. You can go back and watch the replay and go check out Mark's channel as well. And then, like I said, he's also over on Instagram. So, Mark, I sure appreciate you taking time. I know you're probably about to start the circuit before too long of YouTube shows answering all of the same questions. So I appreciate you doing it.
Yeah, no, I feel like we packed in a lot of good stuff in this one. Sometimes there's more fluff than there should be, but this one was pretty dense with valuable information, in my opinion.
Good. Well, I appreciate that. I want to make this valuable for folks. Is there anything that we missed? I mean, because you're the expert. Is there like a going away that I have no idea, I didn't know to ask about, or anything like that?
Probably. Yeah, probably. I mean, the one big thing we did mention, but we didn't hit on a ton, is just self-employment tax. So for a beginning reseller or somebody who's their first year into self-employment, it can often come as a shock. Like as a W-2 employee, you have about 7% of FICA taxes that you pay, Social Security and Medicare. But what we don't realize is that our employer is basically matching that for us. So it's 15% total that the government gets. But then when you become self-employed, even if it's like a side hustle, reselling or whatever, all of a sudden you're paying that 15%, the total 15% on your profits, and you have income tax on top of that. So as a general conservative rule, you can plan on paying about 25 to 30% of your profit toward income tax.
Yeah. So if you want to set aside some for the end of the year, that's, maybe monthly, set aside 25% of what you sell monthly in, probably good. And I don't think we mentioned it, but probably good to have a separate bank account for your business, just for the ease of knowing everything that happens with that account is business related.
I can't believe I didn't even say that. That's the first piece of advice I give people. Like, make sure you separate your business activity.
Yeah. I came up with something, Mark. I feel good about that. I came up with something that you didn't bring up. I'm starting to figure this thing out, which I feel good about. I'm starting to figure out all of the tax stuff. So, I appreciate you coming in, man. And I appreciate everybody for stopping by, folks that catching the replay, because this will live on forever. People are going to be looking for tax information on eBay. So, Mark, people are going to be watching this as long as YouTube's around.
Yeah.
I don't know if that's a good thing or a bad thing, but I think we got some good information. So I appreciate you coming in a whole lot, and I want to respect your time. So we're going to let Mark go check out his Instagram, his Facebook page, his YouTube. Go flood him. Tell him that you came over from this channel. Mark, I appreciate you. Thanks so much.
Yeah, thanks. Appreciate it.
It's the awkward pause while we end the thing now.